Have you ever wondered what modern finance's most successful hedge fund is? The answer is Renaissance Technologies. The fund has become legendary in the investment world for two things: its secretive and unmatched success. Today's video looks into Renaissance's flagship Medallion Fund success. The fund has generated returns of 62% annually before fees since 1998. To put this performance into perspective, $1 invested in the fund from 1988 to 2021 would have accumulated to the utmost of $42,000. But if you invested the same $1 for the same period in the S&P 500 or Warren Buffett's Berkshire Hathaway fund, it would have grown to $40 and $152, respectively. So how does the firm outperform all of its peers year after year? Today we uncover the secret investment strategies used by Renaissance Technologies. So if you want to know the investment strategies Renaissance Technologies uses to generate impressive returns, be sure to stick around for the entire video. Quantitative trading. Quantitative trading has revolutionized the financial industry in recent years. As other firms use traditional investors who rely on intuition, balance sheets, and company analysis, Renaissance's team is adopting quantitative trading. Quantitative trading is the bread and butter of Renaissance Technologies, and few firms have been as successful in this field as Renaissance Technologies. It is no secret the best strategy for investing for making money in modern finance is to remove all emotion and focus on pure, hard data. And Renaissance has done just that. The firm uses well-designed statistical and trading models to avoid falling into behavioral biases. Interestingly, Renaissance Technologies' algorithms use data dating back to the 1700s and are programmed to identify non-random events that are not likely caused by chance. The algorithms focus on these patterns, and then managers make automated trades and take advantage of even the smallest and shortest price fluctuations. Renaissance Technologies had more, better, and cleaner data than any other firm in the space for years. They paid attention to technology and big data before Mark Zuckerberg started Facebook. Zuckerman, the author of The Man Who Solved the Market, says that traditional investing models, intuition, analyzing balance sheets, and speaking with companies are no match to Renaissance qualitative models. This is because the firm's models process vast amounts of data instantaneously. This explains why the firm only hires mathematicians, quants, statisticians, and physicists. Jim Simmons' hiring policy is the key to success. Jim would not hire or even consider any individual with a finance background. He goes for scientifically minded experts to ensure the fund is 100% quantitative investing over diverse asset classes: equities, forex, commodities, and futures. Quantitative trading makes the firm one of the most profitable funds in history. Even while the fund fee charges are high, its net returns of 39% are still significantly better than almost all other funds, and manages to do that consistently well. The fund's approach to making money is similar to a casino, making many small bets with the same profitability. To do this, the fund uses high-frequency trading, HFT. High-frequency trading is executing trades at high speeds and frequencies using complex algorithms. In recent years, high-frequency trading has been a buzzword in the financial industry. However, none of the hedge funds does it better than Renaissance Technologies' Medallion Fund. Renaissance Technologies makes high-frequency trades but also holds positions for up to 1 or 2 weeks, but with an average holding period of 2 days. At any given time, the fund holds thousands of short-term positions, both long and short. According to Robert Mercer, the former co-chief executive of Renaissance Technologies, the firm's algorithms are right 50.75% of the time. If the firm makes 1 million trades, the firm can easily make $1 billion. According to Campbell Harvey, a finance professor at Duke University's Fuqua School of Business, being right just over half the time theoretically could result in a lot of money. Suppose you are possibly transacting thousands or millions of trades. With a small amount of profitability per trade, this accumulates into a big amount. Even though Medallion's strategy seems risky, it is grounded on sound mathematical and statistical models, thus allowing the fund to make innumerable split-second trades in futures and equities markets. Shorten holding periods. Markets can be volatile, And holding an investment position for too long can lead to losses during extended downturns. Therefore, acting swiftly and adjusting to changing market conditions is important. Shorter holding periods allow for more frequent rebalancing, which can help to maximize compound growth rates. Renaissance Technologies has a preference for short holding periods. Rather than holding onto investments for weeks or months, the firm looks for smaller, short-term opportunities to get in and out. This tactic helps the firm avoid volatility drag, the degradation of compound growth over time due to market volatility. As the market properties change regularly, it's crucial to take measures frequently and act on them frequently. Berlekamp, a mathematician and former consultant to Renaissance Technologies, recommends increasing trading frequency to tighten the variability of the average compound growth rate received, as buying and selling infrequently magnifies the consequences of each move, making the portfolio more vulnerable to risk. Then again, making many trades reduces the importance of each move, lowering the portfolio's risk. Why hold assets for shorter periods? Because it is easier to predict tomorrow than a month from today. Convergence trading. Renaissance was the first to adopt this approach, which has been highly successful. In fact, the firm clocked in a gain of $1 million in a single day for the first time in 1990, and ever since it has replicated this phenomenon on many occasions. So what is convergence trading? Convergence trading is a popular investment strategy that involves finding two different financial instruments, priced differently, and betting on them to converge to their proper level. In simple terms, a firm finds two different financial instruments. One instrument is cheap and the other is relatively expensive, and then buys one and sells the other with the expectation that the price will converge to its appropriate level. Renaissance Technologies uses this approach, but with a twist. Instead of manipulating complex mathematical models, Renaissance traders use models to guide their trades, and the trades must pay off within a limited time frame. The firm's traders conduct rapid-fire trading on various assets, including physical commodities, financial instruments, essential currencies, mortgage derivatives, and equities, both in the US and international markets. Ultimately, the fund tries not to override the system in place. If any other person was to use sound models and scientific methods, then they could outperform Renaissance Technologies' fund. On top of the four investment strategies explained above, Renaissance Technologies uses efficient tax-saving vehicles, better known as basket options. Basket options are a type of investment tool that helps investors invest in a cluster of various financial assets instead of just one financial asset. Basket options are like a basket where you put many different things inside. The value of the basket option will depend on the individual performance of assets in the basket, instead of just one asset. Basket options manage risks when an investor invests in many financial assets simultaneously. Investors choose what they want to put in their basket based on what they want to achieve with their investment. This is how Renaissance Technologies is able to trade heavily in the markets.
Okay, so now let me talk about the Medallion Fund. So, when I teach introductory finance, I usually start with a single equation on the board, and the equation is mathematics plus money equals finance. And I would argue that the Medallion Fund pretty much epitomizes that because...
There you have it. The investment strategies for the most secretive fund in the world. As it turns out, there is nothing mysterious about its investment strategies. So, what do you think of Renaissance Technologies' investment strategy? Do you believe it is the key to their success, or are there other factors at play? Share your thoughts in the comments below, and don't forget to like, share, and subscribe.